All right, it's gonna take way too long. Where do we start? Where do we start? Well, first of all, let's make sure I can see the Discord chat. Your entry, Pompilop, I just saw that was, let me go to the general chat here, sitting at essentially these highs right here. You took the entry a little bit later. You took it on this up closing candle. I also understand why. For me, it was also still very, well, I only risked 250, so 0.5% of my equity on that account. But because we were still below the VWAP, and then at the time we pushed through that level, that was really the confirmation. And we retested the stone closing candles nicely, like you drew it up here essentially, and continued to go higher. We done all this during the live stream. Essentially, how this all started was us looking at the higher time frame. Let me hide all the drawings here quickly and put them in a folder. So we just looked at the higher time frame. We did all the analysis, and then essentially we decided to wait until 10 a.m. for a price to essentially tell us what it's most likely going to do. And the question was, are we going to close? I don't have the recording, unfortunately. The question here at 9 a.m., so on the New York opening candle right here, the question was, are we going to close below the bullish fair value gap right here on the 1 hour time frame, or we're going to close above the bearish fair value gap right here? Because it was rather volatile, we eventually even traded to the 1900 levels, exactly the 000 digits. We pushed through that. We had SMT divergence with ES because ES actually took out the previous day's low right here. NQ didn't do that and actually started kept on respecting this old inversion fair value gap right here. Still trading within Friday's trading range. We also pointed that out right around the 50%. This is this red line right here. But once we saw that we actually found support on the bullish fair value gap, we were considering potential longs, at least into this high right here, maybe even the previous day's high. But this was the entire thesis, seeing the 9 a.m. candle close perfectly on the 50% of this inversion fair value gap, and inside of this bullish fair value gap, still respecting it with the rejection wick to the downside. So what we did was drop it down to the 5-minute time frame. So this blue box once again is the 1 hour bullish fair value gap, and this is the inversion fair value gap, 9:55. So this is our 1 hour time frame close right here at 1932. But let's quickly hide the higher time frame here for a second and just look at naked price action without the ICT all-in-one or anything else. We closed right here and there. Then we were already looking at this bearish fair value gap right here, because if we remain bearish and continue lower throughout 10 a.m. till 11 a.m., this was the entire thesis. We pick a small timing window, ideally to execute our trade and look for a potential setup and try to, well, essentially predict what's going to happen within this timing window. And we said if we were to close above this 5-minute bearish fair value gap here after, well, essentially consolidating here for a while, faking out to the upside at 9:30, then moving to the downside. So essentially first a bull trap, then a bear trap, and then we ended up continuing higher. But the main confirmation from our side was to close above the bearish fair value gap, because then we have reason to believe that we can actually hold support on that inversion and at least, at the very least, push into the closest buy side liquidity target. Once we closed above, we took the entry right here on the inversion fair value gap, right around that. and we placed our stop loss at the 5-minute candle low, a rather tight stop loss, but I really wanted to see a rather quick and explosive move to the upside. I didn't want to see consolidation here and us playing around and then potentially stopping us out before we continue higher. I wanted to see this momentum right here, especially the momentum close above the bearish fair value gap, turning it into an inversion fair value gap to continue. If we look at the ICT all-in-one, the only obstacle we really had on our way to break into buy side liquidity here was the VWAP. And we can see we hesitated for a little while. We had these rejection wicks. Then we eventually managed to close above and we hit buy side, rejected at the midnight level, essentially using, because we had a pretty nice 5-minute fair value gap here. We traded into that once. So let me make this into a bearish fair value gap. We traded into it once and rejected, already giving it some validity essentially. Then we traded into it at the New York Open and the 5-minute closes perfectly respected it. Then we managed to close above it and we started to use it as inversion fair value gap, paired with the order block essentially. These down closing candles, that's where the entire move started to the downside. We closed above, we came back to retest it, spent a little longer below the midnight level, but eventually we closed above, opened with a little gap to the upside and managed to push into the previous day's high. And that's where we secured our profits. On the live stream, we're done, we're out within this hourly timing window, and this was our hourly candle. If we now go back to the hourly time frame, unfortunately I missed that. Well, unfortunately, it's not really my timing window, so it's all right. If we look what happened to the hourly time frame now, is that all? Nope. ICT all-in-one. Let's turn on our higher time frame again. We actually did manage to close above this bearish fair value gap we looked at initially, turning it into a inversion fair value gap. So we could change the color of this to a purple color. Let's actually use the inversion fair value gap template here. And we came back to perfectly retest it. We also closed above this bearish fair value gap right here. We stayed inside it for the entire PM session during Monday, essentially. Dropped back below it. Now we closed above. And inside this big inversion fair value gap, we have this, well, relatively small 1 hour inversion fair value gap, which really makes things interesting, because if we now go to the 5-minute time frame again, we hit the previous day's high. We've been on a rally, so expecting a short-term retracement, perfectly natural. We started for the first time within this entire run. It's 10:55, the hourly candle is closing, new hourly candle opens up. We start closing below our highest bullish fair value gap. We come back to retest it twice actually. And where do we retrace to? Well, our 1 hour inversion fair value gap right here. That's where we really start to slow down. Not saying that we enter a long position here blindly, hoping it's going to turn around. I would prefer some more confirmation, and we actually got that confirmation as well. If we go to the 5-minute time frame again, here where our 1 hour bearish fair value gap and now inversion fair value gap comes from, because we closed above it on the hourly, we also had a nice 5-minute inversion fair value gap, the same one we talked about earlier. We rejected here, closed above, used it as support. Now we're coming back to that area and use it as support again. But the 1 hour fair value gap outweighs that. That's just added confluence essentially, that we also ended up respecting the 5-minute here perfectly. So I'm looking for a reaction of this area if I still believe that we're gonna run into a new all-time high today. We've actually been on a pause, so we keep pushing into new highs. Is your take profit target hit yet? It would be interesting to know, because your take profit target was set higher. You entered the trade right here and placed your stop loss all the way at the low. let's call it the safe option. My stop loss, especially with the entry right here, was rather risky. But this my second entry, if I would have been around, well, essentially what have happened here. Once again, let's get rid of the higher time frame stuff. We have our inversion fair value gap also on the 5-minute time frame. And if we look at the VWAP, things also start to make a lot more sense. We extended away from the VWAP. We hit the previous day's high. New hourly candle opens up. We close below the highest fair value gap. Yes, I like to place my stop loss in a safe way. Otherwise, psychology is, yeah, I know. I definitely know what you're talking about. But after, let's get back to, after moving away from the VWAP, respecting inversion and bullish fair value gaps and stuff, we start to disrespect it with the new hourly candle, and we retrace back perfectly to the VWAP here. We could even look at the 1-minute time frame here. I love how everything's fractal like that. We had that last dipper, and even on the 1-minute time frame here, if we would have been that precise, we had a nice inversion fair value gap opportunity here inside the 5-minute inversion gap, inside the 1-hour inversion fair value gap, inside the bigger inversion fair value gap, which just adds a ton of confluence. So even if you would have dropped it down to the 1-minute time frame, this would have been a very nice entry here. Even if you would have waited a little bit longer and said, okay, I want to see it also close above this bearish fair value gap. We violated it right here, but still we closed above it even on this candle. We held the lowest one as support. That's just the 1-minute time frame being the 1-minute time frame essentially. So I like to stick to the 5-minute, and you can still capture nice trades. I mean, this inversion right here into the previous day's high was a pretty good catch. But I want to see the 5-minute confirmation that we're actually going to bounce from here, close back above the midnight level, and then I'm looking at the retracement. The retracement essentially is this entire price lag. Could also argue this is the most recent retracement. So I'm looking to see if there are any bearish fair value gaps within that area, and we actually did see one bearish fair value gap, two actually, one larger one and one very small fair value gap right here. Let's draw that in accordingly. And what that happened, we pushed into it, rejected, pushed back, and closed above it. Right here, this little gray box is our new day opening gap. After closing above it, did we close back below? No, we did not. So how would I have placed my stop loss in that scenario if I would have traded here? Good question. Looking at it like this, I would have placed it on the inversion fair value gap, and a safe stop loss really would have been that market structure low. So we break, form a lower low, form a lower high, form a higher low, a new higher high. So we're looking in to get on that retracement into the next higher high, essentially, into new buy side liquidity, into a new high of day, and ideally the all-time high. So going for the tight stop loss option on this inversion fair value gap likely wouldn't have played out so well, especially on a CFD account. Spread would have stopped you out. So going for the safe option here would have been fine, maybe even down here, but that would have kind of screwed your risk to reward. Only a 1.5 to reach the all-time high, but that's really down to your own risk management and how you handle that. But essentially, it's nice to see. Wicks to the damage, of course, like always. Possibly hunting some more stops. 1 p.m. PM session essentially opens up. We push. Leave behind a nice bullish fair value gap. Hold support, leave behind a bearish fair value gap on the way. We manage to close above that, come back to retest, and we push into new all-time highs. And everything originated once again from the VWAP. We even saw a fractal 1 minute setup in here with the inversion fair value gap. Very nice trading day. We didn't just chop, especially during the New York session. We've seen that recently, ever since, well, essentially Thursday. No clean price action. You can't really trade this stuff on the hourly time frame, if we're being like that honest. It costed me, definitely. I took a couple of losses on my phase 2 account, unfortunately, but made nice profits because I didn't trade on the phase 1 account during this period. The last trade I took on the phase 1 was right here, the long that we also took on the live stream. And ever since we've traded here at this new all-time high, I mean, there's no 1 hour structure we could really use. Big wicks to both the up and down side, then the NFP. Once again, no fair value gaps. Well, this would have been your inversion fair value gap here. So ideally short. But after that, especially during London, just a lot of chop. Then we pushed again. That was yesterday. Let's look at yesterday again. Yesterday was also pretty much straightforward. We said once we close above this fair value gap, we rejected from earlier, we're good to go for higher prices, at least Asia buy side and this buy side. That's a trade we took yesterday. Also paired with the new week opening gap. So this was also a pretty nice setup, but everything inside the London session really just sucked. So yesterday, I guess so far this week, we had a pretty good trading week. I think today was just exceptional, if you ask me, because we actually had nice 1 hour structure to trade with, especially with the inversion fair value gaps and whatnot. But most of the time, the theory stays the same, especially recently with my trades that I take. I wait for either for market makers to show their hand and move one specific way, leave behind a bearish fair value gap, wait for the close above, and enter on the inversion. Same thing here. We had our move to the downside, our pullback. This essentially being our pullback. We leave behind the bearish fair value gap. We managed to close above it and hold support from here, delivering higher from here. Those are currently my best entries. Similar thing yesterday. During all this chop, I didn't really want to get involved. Once we managed to close above the highest bearish here, where we rejected from initially at the 9:30 opening, I was confident enough that we at least could take out this high and the current high of the day. But once again, our retracement is over essentially once we close above the key bearish fair value gaps of that leg. It doesn't matter if you use fair value gaps. Some people would just look at the retracement and simply say, okay, once we not PD array. Yeah, for example, this is the retracement. If we pull back, if we close back above the 80% retracement level or the 61.8 retracement level even, then we're pretty much good to target buy side again. This would indicate you that the retracement is over. So it doesn't really matter what you use, if you use EMAs or just a VWAP or, well, like I do, fair value gaps to determine if a retracement is over instead of blindly buying it somewhere and trusting it's going to play out, actually waiting for the confirmation. That can work really well. Unless we chop, of course. But if we chop, most of the time, like for example here, it doesn't matter what strategy you implement, because fair value gaps are not respected, Fibonacci levels are not respected, we just chop. My take profit is at 19,253. We're now at an all-time high down where the price is going lower. Yeah, that's the issue most of the time. I know what you mean. We talked about it yesterday as well. We didn't take this low. That's why I was skeptical of trusting this teeny tiny little market structure shift. right here. We did form the lower low, the lower high, and the lower low, but I really wanted to see external sell side liquidity to be run the low of day. I think we also didn't do it on the S&P 500. And for me to get engaged on essentially these two up closing candles, if we consider just the bodies, even if we look for the wicks, let's use those two up closing candles as our breaker block. Doesn't matter what we use, we could even just be using that highest up closing candle and look at the total range. If we define this as our breaker block, well, this is inside of a range for me. This is the entire trading range for the day. Let's go to the PU array. This is our entire trading range. We're inside. We had a market structure shift right here. Market structure shift before that essentially happened right here. With a break-in structure, if we look at the lowest down closing candle here, in terms of our breaker block, we were essentially sandwiched. That's why I really wanted us to see the close above this breaker block to invalidate this structure and validate at the same time the long, essentially. So even though we didn't take out the low, sometimes we just take out, it just happens to be like that. We don't take out that specific price level that we're looking for, and yet price still essentially does what we want. So yesterday was more, well, I think we handled yesterday very well. There was reason to believe, okay, we could actually reject from here, VWAP and all that stuff, and continue lower, take out the low and then continue higher, or break lower, retest and continue lower for the rest of the session. That's why engaging here was out of the option, or was no option for me. So having this on my chart with the highest bearish fair value gap, we rejected from it before. I wanted to see the close above. Then we even got the close above the new week opening gap. We came back to retest it. And we're pretty much good to go to, well, reach into new highs. Yeah, not every time they come and hunt that liquidity, but yeah, it's a tough one. You're better off just saying, okay, we didn't take the liquidity, I don't trade. Today would have been a day where we took the liquidity, had the nice inversion set up, shifted market structure right here. That's our market structure shift bullish. We could have looked at our highest up closing candle. If we use the entire wick range, this would have been our breaker block. If we would just use the body and stick to the body at all times, this would have been the breaker block. We came back to retest that only with wicks. We had the VWAP sitting at this level, our 1 hour inversion fair value gap. So this was really, yeah, a overall great area to enter longs. If you just buy VWAP bonds, as if you look for market structure shifts and that stuff. Overall, very nice. Can't really complain there. And yeah, in terms of, yeah, we are at all-time highs. It's pretty hard to tell how high we can actually continue. Let me get rid of the alerts here. Remove all inactive, yes. There are two ways to determine how high we could actually continue to go. Tomorrow is the FOMC news event. We'll see what that does to the market. I won't be trading London or the New York AM session tomorrow. So if we look at this as our final manipulation move, well, we have some ways to go. Essentially, of this final manipulation, we just reached 1.5 standard deviations. It's always nice to set targets. I mean, we could have also just let this trade run, but from experience, I like to get in and get out ideally during the same hour, unless I really look for a long-term trade. But given the 1 hour time frame we saw before, I mean, the chances were there that we're just going to take the old all-time high and turn around again to take Friday's range low. And I think that's still going to happen eventually. Would have to take a look at the higher time frame towards the end of the stream. But yeah, today exceptional setup, not gonna lie. So in terms of targets, what we could potentially reach, we could look at the 5-minute market structure shift. We could also be looking at the final manipulation on the 1-minute time frame right here. And in that scenario, we would have already went past 4 standard deviations. That might be why we're slowly starting to slow down. If we take a look at the S&P 500, you can see that the S&P 500 also managed to, well, didn't break above the all-time high yet, so there might still be a little bit more room for NQ to push above at least current prices. We also talked about ES this morning. ES actually took the previous day slow, so overall it would have been theoretically the better setup to take in terms of liquidity being cleared. I just didn't like the 1 hour time frame because on the hourly we disrespected all the bullish fair value gaps here, just to disrespect them again, and essentially on the 10 a.m. candle close above, back above all these hourly inversion fair value gaps, essentially coming back down to retest the lowest one and then pushing up into new highs. I just like the hourly time frame a lot more on NQ because we happen to not violate these. But yeah, this would have really been a very, very nice entry. Yeah, but in terms of targets, usually that's the best thing to do, especially if we're pushing into new all-time highs. Don't think we're gonna see around the 19,500 levels today, maybe during tomorrow FOMC, but this could be a good rejection target. Could be looking at the daily time frame now. Like we said at the beginning of the stream, I don't think it's very likely that we're going to take the previous day's low here, especially if we look at the weekly, knowing where we're coming from. Let's quickly get rid of all these drawings. Bouncing off the weekly bullish fair value gap, holding on the highest all-time high close. I think I've got this analysis actually on my chart already. Let's turn on the weekly here. Weekly order block. Turn off settlement prices, that's why it's not accurate. And turn on contract adjustment. Still something seems to be, no, right here. Weekly order block, weekly fair value gap. We held nice support, bullish engulfing from that. So I'm not expecting price to, well, unless we chop, but taking that out of the consideration, kind of looked forward to see price continue higher this week. And then if we go to the daily, we retested that previous week's high essentially, or previous monthly high. No, okay, no, that's May's high. That's the end of week right here. Retested that the same way how we would look at it on the lower time frame. We continue higher. All right, essentially all we got right here is a wick retest and we pushed higher. On a lower time frame, looked a little bit choppier. When did that wick retest happen actually? Let's go to the weekly and draw out this line. Go to the hourly again on Friday, then we tested it again on Monday. Today we missed testing it, actually leaving behind this SMT divergence between ES and NQ. Then we could be looking at the final manipulation on the hourly time frame to determine possible targets in the future, given that this daily fair value gap retracement right here. Where do we have it? For our that this retracement is order retracement that we got, and that we know, yeah, well, continue with bullish order flow, similar to what we did here. If we look at the final manipulation right here, we've reached 4 standard deviations. If I draw in a box above the all-time high, and that's where we started to really go sideways. Retrace back inside of our range, hunted some stops, And now on the 4-hour time frame, we really can't call it final manipulation. Maybe if we look at it like this, lower low, lower high, lower low, and then we held nice support on the down closing candle overall right here, pushing higher. So in terms of targets, this would be our 4-hour 4 standard deviation target. If we drop down to the 1 hour and look for our most recent, yeah, well, it's essentially the same one right here. And if we line that up with today's final manipulation on the 5-minute time frame, do you think that's random? Oh, sorry. Okay, I missed something. So in terms of the higher time frame, we could be potentially looking forward to Nasdaq around the $20,000 level. Over the longer, that's not going to happen within a day. Not even with FOMC, if you ask me. It's still 800 points away. For the short term, I would be looking at least this week, potentially see the high of the week, somewhere around that area. That's really the best way to measure or to look for potential targets and to slowly scale out on these consecutive standard deviation levels, if you ask me. And then maybe also cut some risk once we start disrespecting bullish fair value gaps after, well, respecting them for a while. What's the time? It's 14:50, 55. That's a new hourly candle. Similar to what we did right here. We could see something right there. Return to the VWAP, still pretty low, actually. Yeah, but shorting new all-time highs is also a very risky business, so would maybe stay away from that. And just watch from here if you already caught along. Maybe a retest to the down closing candle right here and keep holding support on these down closing candles. Similar to what we did right here, holding support on the all-time high with the previous day's high, with the bullish value gap right here. But still nothing I would like to risk my money on. I like to actually see the manipulation beforehand, spot it, and then anticipate at least. I'm a big fan of taking profits at low-hanging fruit targets. It's just better for my, well, mentality and psychology overall. I don't like really, at least when it comes down to funded accounts, like holding positions over a long time. I've got the eyes up for a swing trader and patience, maybe at least when it comes down to NQ, because it is damn volatile, at least on the lower time frames, even on the higher time frames, to get in and out rather quickly and be content, even if it means it's just a 1-to-1 risk to reward ratio. But if it's a high probability 1-to-1 risk to reward ratio, I'm still happy with that. Because more often than not, we hit buy side and then we turn around and then it's just super annoying. Rejection was 0.4%, quite big. Well, eventually, I mean, we could see this continue to rally and then looking forward to tomorrow, see London chop accumulate for the FOMC news event, and then once FOMC hits, we're likely going to see one wick and then move the other way, then maybe move back the other way. We'll see. I'm likely not going to be taking trades tomorrow, especially not during the New York Open. Tends to, yeah, well, most investors are waiting for, unless it's a quick scalp, So tomorrow would be a perfect scenario of where if we would have seen this setup tomorrow at the New York Open, then I would have made sure to take majority of my profits right here. Not because I'm scared or anything, just because, well, all right, I made some profits. It's FOMC news day. Don't have to stretch it. Even if it continues to run higher, I don't care. I made my one-to-one risk to reward. I can be happy with that. Done for the day. Of course, you gotta, well, also do it then, because especially when we're in profit, we tend to turn the greedy mode on. At least I do sometimes. And yeah, then it's just tricky to control yourself at that point. But yeah, anyway, so tomorrow is going to be interesting, especially for the US dollar. But overall, we took out the lows. Let's look at the monthly time frame here for a second and hide all these drawings. Big scale, like I often say, eyes of a swing trader. Yearly time frame. I would rather say bullish for the year, for the 12-month price action. But there are so many things that will essentially interrupt the chart here, especially the dollar index. Looking at the lower scale, here we rejected from the 50% level. Yeah, it's tough to tell. Honestly, looking at this, if I would see this on a lower time frame, I would completely skip it. Ever since 2022, we're essentially been stuck in this range right here. Seek and destroy conditions, kind of. We form a low, we form a high, we take out the low, we take out the high. We failed taking out the low. We failed taking out the high and rejected. It's tricky. But if we were to trade this and assume that's the lower time frame, well, I would be expecting damn, no, it's gone. I would be expecting support on this monthly inversion. Essentially the balanced price range right here, because we have an old bullish fair value gap we cut through. Of course, we didn't respect all of that stuff, but essentially what I would be looking for is higher prices of this area, targeting buy side liquidity. It's essentially meaning dollar index go up. Looking at the weekly, well, difficult. I would have assumed that we are going to surely take out these lows. If we would have taken these lows right here, and we would have seen this kind of reaction then. But like I said, like we had it earlier, sometimes we just don't take out our ideal lows and keep moving into a specific, into the anticipated direction anyway. So tomorrow for the FOMC news event, it's just going to be really interesting on how we trade through this overall weekly inversion. We have the weekly bullish just below. No, it's gone again. Damn. Definitely not during the London session. We will see. I might jump on a New York Open live stream just to maybe paper traded. Not really sure what's the point of that anymore. I prefer trading the PM session after the FOMC news event. So at 2:30 p.m. essentially, when the market makers showed their hand and everything's done. I don't like really getting in prior to that, unless I'm entering super scalp mode and I'm just looking for quick scalps in and out from the easiest bullish fair value gap into the really closest buy side liquidity pool, whatever it might be. But yeah, that's essentially what I prefer to do on these FOMC or NFP news events. Take a look at the 5-minute time frame with the 3 p.m. opening. Pushing back above the inversion fair value gap. We'll see if we actually get continuation higher. Looking at the 15. Well, if the push continues and we just keep holding support on the highest bullish fair value gap, could see higher prices here. But I don't know, it's difficult. Looking at the entire range here. Also hit the 50% level here perfectly off our range. Low of day, high of day, retrace through 50%, VWAP. Yeah, same for me. I also like to sleep in peace, at least when it comes to day-to-day trading. I mean, I'm still holding massive amounts in crypto, but that's a whole different story. But yeah, no, overall, if we just look at this range, we hit 0.5. Now we're hesitating. We could see maybe 19 to 80 today if we really, during the final hour of the New York session, essentially keep on pushing here to that one standard deviation of the daily range so far. Would have been a pretty nice trade from right here. I mean, we could caught the initial long. Can't complain about that, but yeah, let's leave it at that and see if we have any questions from you guys on the Discord who joined this little recap. Let's call it recap, yeah. And maybe even outlook for tomorrow's FOMC news event. Interesting. Yeah, we'll see. Did ES push into a new all-time high yet? It did not yet. Interesting. We'll see. If ES pushes into the new all-time high today, then I think we're going to see that standard deviation being hit on NQ of this final range. But yeah, I think otherwise we're just going to leave it at that. Unless you guys want to talk to me about something or ask something, feel free to. Otherwise, we wrap it up. I upload the recording to the YouTube channel for everyone else to watch. Yeah, tomorrow is tomorrow, today's today, and yesterday is past. Take your profits, be happy, and well, essentially, if you enter on the down close, I assume 2 to 1 is your target. Oh, tough one. Well, you could move your stop loss to break even, but depending on if you want to pay overnight fees or if you even can, depends on if you trade CFD or future funded accounts. I mean, eventually that price is going to be hit. It's just a matter of when it's going to be hit and what we're going to do ahead of it. We could just push into it during the remainder of the power hour, or we start retracing and people take their profits. Oh, tough one. I'm honestly glad I don't have to make the decision. But maybe take partials, leave it open depending if you can hold it overnight. Or just close it completely, close the charts, call it a day, and come back tomorrow, watch the NFP news events. Be careful though, maybe use a little bit less risk or lower risk. And we'll see what happens on Thursday, Friday. All right, guys, I'm going to be uploading the recording to YouTube. So, yeah, thanks very much for joining in and being interactive. Really appreciate it. Yeah, 1.75 hours is really good. Those last 0.25 are, I don't want to say don't really matter, but yeah, if you're happy with it, it's the end of the day. It's better than sitting here and then potentially seeing it, all right, okay, we're only 10 minutes away from the close. Now I'm only at 1.5 risk to reward. It's better to take it at 1.75, missing out on 0.25 of your initial risk in terms of risk to reward, than closing it down here once we hunt these stops down there and closing at a 1-to-1. Then you would have just wished that you would have secured it at 1.75. Whatever you do, you gotta live with it essentially. And if you're happy with it, that's all that matters. All right, guys, take care. Enjoy the rest of your evening. We'll be back tomorrow. Bye.